Hello, I'm Adrian Finnegan. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, as the G20 offers a debt payment holiday to the world's poorest nations to fight the coronavirus pandemic, is it time for private investors to do the same? Southeast Asia's garment workers and industry pay a heavy price due to the pandemic. Millions of jobs have been lost despite patchy government support. And the Sharia-compliant FinTech startups scrapping for a bigger share of Indonesia's multi-billion-dollar finance industry. May 1st was an important day for the world's poorest nations. It was the day that the rich club of G20 nations gave debtors a payment holiday until the end of the year. The hope is that debtor nations can use the money to pay for healthcare during the pandemic. Despite more than 100 countries applying to the International Monetary Fund for emergency aid, the IMF and World Bank haven't been so generous, insisting that nations keep repaying interest on debt. Although the IMF has offered some relief to 25 poorer nations, which amounts to $200 million, which, let's face it, isn't that much. But nations really do need help. Nigeria has received $3.4 billion from the IMF. With debts of only 30% of GDP, you'd think that the country couldn't get into trouble, but it's dependent upon oil for 90% of its export earnings. With crude prices cratering, it has little room to service its debt, which is estimated to take up to 2/3 of its retained revenue. There are other nations with precarious finances, from Argentina to Ecuador, Lebanon to Venezuela, and there are calls for the private sector, an industry worth $22 trillion, to give countries a payment holiday during the pandemic. In an op-ed in the Financial Times, the Saudi finance minister, Mohammed Al-Jadaan, said that private institutions are owed $18 billion by the world's poorest nations this year. If they were to suspend half that amount, that would provide an additional $9 billion to fight the COVID-19 pandemic. Let's put that to Rodrigo Olivares Caminal. He's the professor of banking and finance law and an expert in sovereign debt at Queen Mary University in London. Professor, good to have you with us. So governments are doing their bit. Should the private sector step in and offer debt relief to emerging markets?
Well, Adrian, we need to be careful how we define debt relief. My understanding is that it is the private sector interest to give some breathing space to sovereigns, but the reality that we need to bear in mind that the money has been lent, and it's not about debt forgiveness. This is about allowing countries to recover and honor their debt obligations. That would be my take. Private sector understands the magnitude of the problem, and they think they need to be part of the solution. But what we need to bear in mind would be the unintended consequences if we ask for total debt forgiveness, because then when these countries need to bounce back, they will need to obtain financing. And if you impose a haircut or a cancellation of these debts on the private sector, then they will not be willing to lend again.
Why, Professor, should taxpayers be willing to take a haircut, but private investors not so?
Well, because what you need to bear in mind is that these private investors pay their taxes, and once they have some money in excess, they invest in securities, in debt instruments of other countries to help them finance their needs. So this is money in excess that savers are putting on the side to help other countries as well. What you need to bear in mind is that on those that you are trying to impose haircuts are those that have put their life savings for retirement, for example.
At a time like this, a pandemic, unprecedented in the modern era, surely we should all be setting aside the rule book. After all, I mean, huge debts are going to be the norm for many of the world's richest nations for many years to come now, aren't they?
Definitely, but there are two things that we need to distinguish, because most of these debts are pre-pandemic. And most of these debts have been used to finance specific projects. So I understand the severity of the pandemic, and I understand that that's why I have no doubt whatsoever that breathing space to regain access to finance and to allow projects to generate the necessary cash flow to repay the debts is needed. But I'm not sure that a complete outright cancellation of the debt is the way forward. Because what you need to understand is that it's like you go to the bank to borrow money to buy a house, and then you decide that you are not going to pay back that debt to the bank. Or if you happen to be selling raw materials to a business, then that business turns around and says, look, there's a pandemic, I will not pay for the products that you've been delivering to me. It will be kind of going back into complete anarchy.
Explain something for me, Professor. Why is it that rich nations can increase their debts with minimum fuss, and yet poorer nations can't do so without triggering inflationary pressures or storing up trouble for further down the road?
Adrian, I'm not sure that statement is completely right. But if you look at Italy at the moment, Italy is, according to I think that you will put Italy within these developed countries, and I think that they are experiencing some hardship. Their bonds are one notch above junk territory. So I think that basically developed and developing countries feel the hardship in the same way. The only issue is that developing countries pose additional risks that are priced differently. Risks that have to do with political stability, risks that has to do with corruption, other underlying problems that need to be addressed. But it's not purely attributable to financial issues. And some of these countries, they have been highly indebted or very fragile prior to the crisis.
Do you think that the World Bank and the IMF have the financial muscle to help every country that requires that kind of assistance at the moment? The US was against providing additional funding to the IMF. Why was that? And would that increase in special drawing rights have been disproportionately beneficial to China or Iran?
Adrian, I'm very happy that you asked this question, because this circles back to my initial argument that these countries need the private sector the most, because once the bounce back will kick in, once the pandemic is over, and then they need to recover and they need to reignite the finances of their small and medium-sized enterprises, that's when they will have to resort to the private sector. Because I personally think that the IMF, the World Bank, would have used their firepower, their ammunition, to beef up countries now during the pandemic. But after the pandemic has passed, after those resources have been depleted, who is going to be financing the kickstart of the economy again? And that's precisely where I think that the private sector needs to come in. And that's why I think that basically being too aggressive with the private sector from the outset will not allow them to be there once they will be most needed.
Professor, it's really good to talk to you on Counting the Cost. Many thanks indeed for being with us.
Thanks to you.
Now, it is, of course, Ramadan, a time not only for fasting in the Muslim world, but also for charitable giving. It's also an opportunity for the fledgling Sharia FinTechs who are battling over the billions of dollars that Muslims give to charitable causes, particularly in Indonesia, the most populous Muslim-majority country, with 270 million people, half of whom lack bank accounts but do have mobile phones. All forms of Islamic banking account for just 6% of Indonesia's $580 billion in banking assets. So you can see there's huge room for growth. It's such an important market that Google has backed the country's biggest payment wallet, GoPay. And hoping to get a bigger share of the Islamic finance market in Indonesia is the chief executive of peer-to-peer lender Alami. Dima Dajani joins us now via Skype from Jakarta. Good to have you with us on the program. Why is there, or does there seem to be at the moment, such a gold rush for Sharia-compliant funding?
Sure. I think one of the key reasons is actually the growing Islamic lifestyle here, especially in Indonesia. We coined the terms here, hijrah movement, whereby a person would like to become a better person as a Muslim. I think this is also to the fact that there's more social media influence, and this impact actually several areas of their life, such as fashion, and obviously it will go into the financial. So I think that would be the primary reason. Secondary reason would be the government push to really push Indonesia to become the Sharia financial hub in the world. And to this point, the vice president himself is actually leading this initiative to become to make Indonesia well known in this space.
It's still a drop in the ocean, though, when you compare it to the entire banking sector. Why did you personally decide that this was the way you wanted to go, that this was for you?
I think coming through this FinTech business model, using technology to really bridge this growing gap between the demand and the supply is crucial. Because what we see is that you're right, that the Islamic banking industry only represent about 6% of the total banking market in Indonesia. However, from our perspective, we believe that the market is actually way bigger than that. And those markets are underserved by the existing banks. So we're trying to understand like what would be the reason that the banks couldn't capture this market. And the primary reasons, two of them, is actually one is the branding. There's a lot of millennials, especially, who would like to see a very independent Islamic bank without the conventional bank as a parent bank, for example. So they would move towards FinTech for that. And the second is the lack of technology innovation by the Islamic banks as compared to the conventional banks. So the customers is actually longing for an innovative solution, and I think a startup model in FinTech could be the bridge to satisfy this demand.
All right. So Sharia products differ from normal loans. When you make a loan, what happens? What's different from a normal bank?
So I think the main difference is that in Islamic finance, typically you have the buy and sell structure, whereby the financial institution buy it first and sell at a margin. So that margin or that profit is fixed. And then the second structure is the profit and sharing structure, where the funder would get either the returns or, if God forbid, is the loss. So the key difference for me personally, economically speaking, while the interest income in conventional banks and the margin or profit in Islamic banks might be similar, but the concept of compounding interest or interest itself, but economically the compounding part of it is not existent in Islamic finance. So if I were to borrow $100, in any case of late payment, you will not get rolled up, then suddenly I owe $300. I still gonna owe that $100 plus $10, for example. This $10 will be fixed. So I think that's kind of the main difference economically from my perspective.
You mentioned the vice president and his support. Generally, how supportive of the Sharia compliant ecosystem is the government there?
I think we're seeing a very strong support over the past 1 to 2 years. I personally met with the vice president as part of the association a couple of months ago, and he reiterated that his push to really spearhead this initiative and this development. And he's also chairing this KNEKS, which is the new organization formed to accelerate the development of Sharia economy and finance here in Indonesia. We're seeing a couple of initiatives by the organization especially in this pandemic, such as the social finance part of it, like the zakat and the sadaqah, etc.
With the pandemic, how are you supporting people that you've given loans to? Have any of them expressed difficulty in repaying their loans right now?
So basically, for our product right now is invoice financing, Sharia compliance invoice financing. So we don't really see a lot of late payment for that because we're selectively choosing our borrowers type. We also have certain borrowers in certain sectors that is greatly affected by the pandemic. Some of them came to us to ask for like restructuring. We're reviewing that. However, it's still below 5% of our total portfolio. I think to the best of our abilities, we help them, we assist them. And as a peer-to-peer, we also bridge their request to our funders. So we crowdfund our debt from retail and institutions. So we're becoming the middleman and a very professional middleman to really conveying the message back and forth between the borrowers and our lenders.
Really good to talk to you, sir. Many thanks indeed for being with us on Counting the Cost. Dima Dajani there in Jakarta.
Thank you very much, Adrian.
The pandemic has had a disastrous impact on Southeast Asia's garment manufacturing hubs. 1 million workers have been laid off, according to risk consultancy Maplecroft. Despite some factories reopening in Bangladesh, there are still fears that not enough is being done for people who live from paycheck to paycheck. Al Jazeera's Tanvir Chowdhury has more from Dhaka.
In Bangladesh, more than 4.1 million people are employed making clothes, mostly women. But because of the coronavirus pandemic, many now fear they could lose their jobs. Fatima Khatun is a divorcee with 2 family members who depends on her income, and she's worried.
If the factory closes, it'll be very hard for me to manage things. I take care of the rent, my son's education, and mother's treatment. Our appeal to the government is that they should come up with some sort of solution for us in such a situation.
The finance minister says Bangladesh could lose 1.1% of its GDP during the outbreak. In the industrial area of Dhaka, you can sense anxiety and alarm. The streets are empty and many of the factories have closed their doors, uncertain as to what is to come next. Industry leaders say the situation could worsen.
Out of the 4,200, only 880 factories have so far reported losses of $2.94 billion. So you can well imagine the impact. We'll be stuck with the goods. There will be no payment. We have no certainty, no assurance from any buyer that they're going to be taking it. And also, all our liability for our fabric and accessory, everything's piling up as well. So the immediate impact is basically the workers' lives.
The garment manufacturers and exporters has urged its members to consider shutting their factories to limit the spread of the coronavirus. But those who plan to make personal protective gear to fight the pandemic can remain open, ensuring workers stay safe.
We feel that as long as they are in the factory, they are safe. Our factories are maintaining safety in all aspects. Before entering, everyone has to go through all hygienic procedures of hand washing, etc.
Economists and business experts say the government must allocate funds to help those who become jobless, especially if they are on low incomes. Prime Minister Sheikh Hasina has announced plans for a stimulus package of $589 million for the industry to overcome the fallout. But for those who live from one paycheck to another, that seems to offer little immediate relief. Tanvir Chowdhury, Al Jazeera, Dhaka, Bangladesh.
40 million garment workers are employed by the industry in countries such as Cambodia, Bangladesh, Indonesia, Myanmar and Vietnam. And there are real fears that labour rights could unravel. Sophia Nazalia is a human rights analyst at Maplecroft. She joins us now from Singapore. Good to have you with us. Sophia, a hugely important sector for Southeast Asia. But what do these rapid job losses mean for the region? And more importantly, of course, labour rights.
Yeah, thanks for having me. Well, I think first to put into context, many of these garment manufacturing hubs have poor labor rights records to begin with. So our various Maplecroft data shows that countries such as Cambodia, Indonesia, Bangladesh, they often record the highest risks in terms of forced labor, child labor, and other key labor issues. So I think the situation that we have now with the COVID-19 pandemic is we're seeing, as you've mentioned, massive amounts of layoffs across the Asian garment industry. And I think the important thing to note here is that as workers find themselves unemployed, they may then turn to more exploitative forms of employment. So, for example, that could result in a greater risk of forced labor, as well as debt bondage and, in certain cases, even human trafficking. So, workers are now also increasingly caught in a position where as certain sectors reopen across the Asian garment industries, we have a situation where workers are caught between having to rejoin the workforce and potentially put themselves in a position at a higher risk of transmission of the virus in the event of being put in, cramped, unhygienic factories. Or the other option would be not to earn a livelihood. So it's a really incredibly difficult position for workers at the moment. They're also facing wage losses, underpayment of wages owed to them. So labor rights for the garment sector is not looking good at the moment.
So these companies are mostly making garments for stores that dominate Western high streets. Do those stores and the companies behind them have any responsibility towards those garment workers in these countries?
Well, I think in a nutshell, yes, to a certain extent, these global retail companies do have a responsibility, especially for the most vulnerable workers in their global supply chain. We see already global retail brands reacting to scrutiny and pressure from international labor groups and other human rights organizations. We see some retail brands setting up COVID-19 wage funds for the most vulnerable workers. We've also seen employers or companies making commitments to not default on payments for orders that they had faced previously. So those are lifelines given to garment workers. But we think that the more important long-term solution really lies in these global retail brands working with stakeholders on the ground. So whether that be national governments themselves, they are of course a crucial partner, but labor groups that represent these workers as well. So it requires a process of long-term collaboration to be able to address these really serious economic grievances that garment workers are currently facing.
What about the countries in these governments? Is anyone apart from Cambodia offering support to garment workers? Do they even have the financial headroom to do so?
So, as we know, stimulus packages have been implemented by most of these garment manufacturing hubs that we're looking at. India, Bangladesh, Indonesia have all implemented different packages, obviously different stimulus packages, targeting low-income workers. Of course, garment workers are part of them. I think with the important thing really to note with the garment sector is that they're really reliant on informal workers. So these informal workers may find difficulties accessing that type of coronavirus-related financial aid that the government is giving, primarily because they're finding it difficult or impossible even to provide proof of employment. So I think moving forward, retail companies really have to grapple with this reliance on informal workers. It won't bode well in terms of labor rights in an unprecedented crisis such as this. So that's really an issue. And in terms of financial headroom for different governments, bail packages are short-term solutions. Governments can for now provide some aid to factories that are struggling to pay their workers. But there's a limit to how much aid that can be given. At a certain point, factories may start to lean towards borrowing, and this in itself is obviously unsustainable. So I think it's not as easy situation right now for the retail sector. They're fighting fires on many fronts, not only being answerable to their workers, but also facing supply chain disruptions and so on. So there aren't any easy solutions, unfortunately.
Sophia, really good to talk to you. Many thanks indeed for being with us on Counting the Cost.
Thank you.
And that's our show for this week. If you'd like to comment on anything you've seen, you can tweet me. I'm at @afinnegan on Twitter, but please use the hashtag AJCTC when you do. Or you can drop us a line. Counting the Cost at aljazeera.net is our email address. There's plenty more for you online at aljazeera.com/CTC. That takes you straight to our webpage, and there you'll find individual reports, links, even entire episodes for you to catch up on. But as I said, that's it for this edition of Counting the Cost. I'm Adrian Finnegan from the whole team here in Doha. Thanks for being with us. The news on Al Jazeera is next.